Let's get to some of the numbers now. Sally Tindall from RateCity joins me here at the desk. Sally, good to see you. 4.1% now. So just take us through what this means for people now compared to last year, now compared to last month.
A lot of money, that's for sure. $500,000 debt at the start of the hikes. They're looking at a $76 increase from yesterday's decision. But we know that there's been 11 before it. So when you add up all 12 hikes, $1,134 extra that borrower has to pay every single month in post-tax dollars. And then, of course, if you live in Sydney, you live in Melbourne, you bought recently or near recently, you've got $1 million debt or more, that's $2,269 extra they have to cough up month after month with absolutely no end in sight at this point. You know, if it even stays steady at this point, that's a lot of money to be forking out every single month. But we know from what Governor Lowe has now said is that further cash rate hikes could be required. You certainly got Westpac, who came out late last night saying they expect the RBA to hike in July and potentially again in August. That would take the cash rate to 4.6%.
Yes, and we're talking about the RBA rate as well. When you look at the banks, they're well above that.
Well above that.
Rate. What is the average? You know, what's the best rate you can get at the moment?
Yeah, let me paint the scene for you to then get to the best rate, right? Because the best rate doesn't sound very good anymore because those 1% and 2% rates, that was long gone. The average owner-occupier who has done nothing with their home loan since the start of the hikes, they haven't haggled, haven't refinanced, they're going to soon be on a rate of 6.86%. It's almost 7%, right? But all four big banks, apart from Westpac's got an introductory loan, but all four big banks' lowest ongoing variable rates are expected to be over that 6% mark after this hike. We've only heard from Westpac so far, but the other three are likely to follow suit, pass it on in full. So we're expecting the big four banks to be sitting just over 6% as their lowest rate. A competitive rate, I reckon, would be around 5.75 or under. We reckon, there's quite a few banks that'll hold on to that kind of rates in the fives, high fives. Yep. 9 lenders we're expecting, could be a little bit either way, but 9 lenders under 5.5%. What a difference from 6.86% all the way down to 5.5% if you can refinance. What a big if, though, at this point. There are a lot of borrowers that are now finding themselves in mortgage prison, not because they don't have enough equity in their loan. Property prices have been staying, pretty healthy. It's because they can't meet the higher serviceability tests now that APRA's holding that line with the 3% buffer, plus rates are significantly higher. A lot of borrowers just finding that they can't refinance.
Doing the quick maths, if you've bought a new home in the last couple of years, just let's say your mortgages are $1 million, a round figure, is it right to say that you now need to find around an extra $50,000 in post-tax dollars to pay that mortgage? Is that about right?
Oh, well, you're paying an extra...
$30,000.
Yeah, you get $2,269.
Sorry.
That's all right.
Don't panic, everyone. My maths are off. It's about $25,000 to $30,000 extra.
In post-tax dollars, I was trying to think whether you meant pre-tax dollars, and then I was thinking about what tax rate they're at. So yes, but yes, that's about right. It's an obscene amount of money. This is huge dollars, and you know what? $1 million in Sydney is not abnormal. There are people walking around with $2 million loans. At the height of the property price boom, and when rates were at record lows, APRA's buffer was 2.5%. We had people, like 25% of new loans had a debt-to-income ratio of 6 times or more. These are the people that are absolutely buckling under the weight of these hikes. And just to be clear, most borrowers have only started paying for their 9th or maybe 10th hike. There's a 2 to 3 month lag on monetary policy. Yes, they hike the interest rates within 10 days of the RBA making an announcement or thereabouts, but you don't actually have that money come out of your bank account for up to 3, sometimes even 4 months. NAB reviews this quarterly. And so there's some people that are out there thinking they've already conquered 11 hikes when they're actually probably only up to 9. We asked around the office, no one could tell me, and these are fairly, competent people who look at mortgages all day at RateCity, no one could tell me accurately what rate hike they had started paying for. It's mass confusion out there. How are people meant to budget when they don't even know what rate hike they're up to?
It's a good question, Sally. Thanks so much. I think I don't know.
Well, look, quick advice is ring your bank, find out what your monthly repayments will be after this hike filters through. Ask them to whack another 0.25% on just to be, comfortable. Start paying that amount now. Then you don't have to worry about it.
Redo your family budget.
Yeah.
Sally, thanks so much. Appreciate
Thanks, Laura.
that.